Hello, everyone. My name is Moe and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. No matter how safe an investment sounds, it comes with risk. To read more about it, please see the description below. During the pandemic, the government imposed measures aimed to slow down spread of COVID-19. Many U.S. retailers shut down operating or reduce their hours and cut down on customer flow, all of which result in plunging sales and permanent store closures. Fast forward to 2023, the economy may be fully open, the retail industry is still facing headwinds. Inflation remains high, interest rates are up, and household debts are soaring. And fears of a recession are cutting into consumer spending. Everyone from Costco to Target to Dollar General are feeling the pinch. It's a different story, though, for outlet businesses. In particular, today's income stock, Tanger Factory Outlet Centers, Inc., traded on New York Stock Exchange under symbol SKT. John?
Yeah, thanks, Mo. Tanger Outlet Centers is trading at its highest level since 2017. They reported strong first quarter results, increased its full year guidance, and raised its payout on its high yield dividend by 22.5%. At a time when the retail industry is facing headwinds from high inflation and, as you said, soaring household debt and a looming recession, you can't ask much more out of a company than what Tanger Factory Outlet is doing right now.
Explain a little bit about what Tanger Factory, what do they actually do?
It's a leading operator of upscale, mostly open air outlet centers that own 37 shopping centers totaling approximately 14 million square feet. Their properties are located in 20 states and in Canada and are leased to 2,700 stores, operating more than 600 different brand names. Some of the company's tenants include Banana Republic, Coach, Lululemon, Pottery Barn, and Columbia. It's also working to introduce non-retail uses, including food, entertainment, experiential, and digital concepts. For those worried about how the economy is hurting even the outlet malls, the company's properties have a 96.5% occupancy rate, with tenants paying $447 per square foot. And that's actually a 0.4% increase from the fourth quarter of 2022. And the company has actually reported 8 consecutive quarters of improving rent spreads.
One thing very clear, that retail is taking a hit, and we've seen this, from major companies as well. How did Tanger do in the first quarter of 2023?
Thanks to the company's strong tenants, high occupancy, and growing rents, it's been reporting strong results. For the first quarter ended March 31st, the company announced that total revenue inched up to $108.9 million. Net income climbed 15% to $23.3 million or 22 cents per share. Core funds from operations were 46 cents per share, and that's up from 45 cents per share in the prior year period. And it also generated funds from operation of 47 cents per share, and that's up from 45 cents per share in the previous quarter. And also importantly is that same center net operating income grew 7.5% on a year-over-year basis to $83.6 million.
And here's something I find interesting. You had mentioned earlier that they raised their guidance for full year 2023. Could you explain a little bit more on that?
Yeah, based on solid first quarter results and management's outlook for 2023, the company increased its full year earnings, funds from operation, and core funds from operation guidance. It now expects to report net income per share in the range of 89 cents to 97 cents. That's actually up from previous guidance of 87 cents to 95 cents. Funds from operations per share of 183 to 191 per share, and that's up from previous guidance range of $1.81 to $1.89. And core funds from operations per share is expected to be in the range of $1.82 to $1.90. And that's up from a previous range of $1.80 to $1.88.
And now let's talk about something that we're really focused on at Income Investors. What's happening with their dividends?
Well, lots of good things. Unlike many retailers, Tanger has been raising its quarterly payout over the last 2 years. Since the start of 2022, it's raised its quarterly dividend 3 times. This past April, it announced a quarterly dividend of 24.5 cents per share, or 98 cents per share on an annual basis, for a yield of 4.57%. The payout actually represents a 22.5% increase over the 20 cents per share paid out in the same period last year, and an 11% increase over the 22 cents per share in the previous quarter. The big question, of course, is whether that frothy dividend is safe. And the answer is yes. In the first quarter, Tanger generated funds from operation of 45 cents per share and that resulted in a funds for operation payout ratio of just 48.8%. That low payout ratio means that even if business slows down, there's more than enough financial wiggle room to cover its dividend. On top of that, if management wants, there's also plenty of room to announce additional dividend increases, and history is on the side of dividend hogs.
And I know you mentioned that SKT stock is, recently hit a fresh 52 weeks high. Explain a little bit more there. How's the stock performance looking?
Yeah, well, again, strong financial results, increasing metrics. It's helping Tanger stock crush the broader market and its peers. In fact, it just hit a 52-week high of 22.37 on June 7th. It's currently trading at its highest range since April 2017. And shares are currently up 15% over the last month, 25% year to date, and 35% year over year.
John, thank you so much for talking about Tanger Factory Outlet Centers, Inc., traded on New York Stock Exchange under symbol SKT. The retail industry is facing headwinds, but the outlet business has been a bright spot in the industry, resulting in a strong demand for Tanger properties. It is opening new location, has a strong balance sheet, reporting strong quarter results, and also hikes its dividends. For income investors, Tanger is also proactively managing its balance sheet and liquidity, giving its flexibility to execute long-term growth strategies and create value for shareholders. That's it for today. We'll be back with another exciting dividend opportunity soon. Stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.